still the fundamental point is that how do you know that what is the fair value of gold? I can understand that during times of geopolitical tensions, when there's loose monetary policy,
So
it's good.
the value of gold is proportionate
But
to
how
the
do you know? Yeah, but how do you know that
precise. That is exactly why I said you cannot
value of gold is proportionate to? So what is that? You were getting to a certain point. Yeah.
See, we know for sure. You cannot know exact value of gold. But
that is exactly the problem, right? Because I'm going to pay a certain amount. So how do I know? So how do I know whether?
But in India, there is no problem because the rupee will keep falling irrespective of who is in government.
Yeah.
In US, I will worry about the value of the gold when the US balance sheet starts to contract. What in 2008 was a $1 trillion Fed balance sheet has become 9 or 10 trillion. And the Fed, while increasing interest rates, it stopped the buying of bonds. But whatever bonds it bought back and became bonds expired, they bought the similar bond to keep that. So they did not allow reduce the balance sheet. So the day the Fed is confident that it can reduce the balance sheet, Japanese central bank reduced balance sheets.
Then
and
you
Europe,
can worry about gold.
Then I will worry about gold. But you are using quantitative easing, which is supposed to be a extraordinary drug to clear a heart blockage as if it is a paracetamol. So as long as you are using a drug that can clear heart blocks as paracetamol, gold will keep rallying.
But I can tell you one example. Let's say
I know the example. I can tell you the example.
Yeah, but let's say look at 19 when you talk about Greenspan and tighter
I'm talking about
Greenspan and tighter monetary policy. But from 1980s to for almost 3 decades, you had gold going nowhere.
No. But please understand.
Yeah.
Gold was going through the roof. Gold was $36 an ounce.
Yeah, that was that was right in the 1970s. Yeah.
On 15th August 1971, gold was at
$35 or something like
$36 an ounce. By 1977, it had gone to $800 an ounce because the Americans went off the gold standard.
Gold was basically freely traded after that.
And the price just shot up.
Yeah.
And when US inflation became unbearable, they brought in Paul Volcker.
Yeah.
And so Volcker was there for 8 years. And he allowed the US Fed rates to go up to 20%. US interbank, it's not common.
So that was a bad time to hold gold. That was the time to sell your gold.
That was the time to sell
your gold. Yeah. Because balance sheets were shrinking. Central bank balance sheets.
Central banks were shrinking. Money was 20%.
Yeah. So
I don't think any US president
right now is going to
will allow that. Allow that kind of independent central bank governor to come.
Yeah.
So the moment when there is independent central bank governor, we will worry. Today, as long as the central bank governors are reflecting their master's voice, you don't have to worry about gold. Because as Socrates said in democracy is like a sweetmeat shop. Politicians need to get elected every 5 years. So they are not worried about the long-term consequences. They are worried about short-term consequences. So as long as the democracy is there, money will get printed, money will get created, gold will go up. The only way for gold to drop now is for China, Russia and America to make up and kiss up. But in these 3 players, Trump is the only one who will go out. A liberal American president is not going to kiss and make up with either Xi Jinping or Putin. And both are authoritarian regimes, not going anywhere. Till that issue is settled, gold will not correct big time. There will be big corrections. There can be a 10%, 20% decline, but not much.
Okay. I also want to understand, the whole game of why central banks are holding gold. They're buying a lot of gold.
They are buying gold, especially.
Yeah. So but the point is what are they going to do with that? But I can understand that if we were on the gold standard, you would want. Let me finish my point. The point is if we were on the gold standard, and if a central bank had a lot of gold, they can back their currency with gold and stuff, and they would be, the monetary policy would have to be tight because you can't print more currency without gold. But what is the point? I don't think any country today is looking at that because they have to spend, right? They need to fund their deficits by printing currencies. So what's the point of them going towards
A country like China runs a current account surplus. They get more dollars than they can spend.
So rather than putting in US assets, they're
why will I give it to you?
gold.
Why will I lend it to my enemy? I prefer gold. So there are plenty of countries, Asian, West Asian countries, and even countries like India, which is running a consistent trade deficit, and all the forex reserves that have been created are by selling capital assets, who are buying gold today. So when there is a trust breakdown in global orders, but the Chinese and the Americans don't trust with each other, gold becomes the bridge between two countries.
So it's not any revamp to the global monetary system or nothing like that. So they're just like purely trying to diversify the assets.
They are trying to diversify the assets. Their gold standard is a bad idea because that controls the amount of currency you can print. The record is very clear. Between 1970 and 2025, absolute poverty in the world has declined. That's what matters. Absolute poverty in the world has declined. So you don't have hunger epidemics breaking out everywhere. Hunger epidemics was a problem in the world right through.
But why would you link that with gold standard?
No, because money is created easily. And since money is created free easily, it has to find a way to get invested. All your startup funding came because of loose monetary policy in America. The moment American monetary policy became tight, you had Byju's going bankrupt. OYO is almost bankrupt. Companies like Zomato and Swiggy had to go public and curb their need for capital.
But you must also understand that countries that are inflating their currencies, it's a hidden tax on the poorest.
As long as there was no tax, as long as money was circulating within the banking system in America, there was no inflation in America. COVID represented a time when money was transferred from the government to the people. Till that time, the president was within the banking system. So as long as it is within the banking system and flows out through infrastructure and other projects, inflation is not a big problem. When money is transferred to the poor, it becomes a big problem.
But why would you? It ultimately affects their purchasing power.
Yes.
Yeah.
So it is like
it's redistribution of wealth.
Like Raghuram Rajan said, a famous central banker, there is no perfect value of currency. So the value of a currency is determined by the price level and the trade balance. So there is too much trade surplus is also a problem as China is finding out today. And too much deficit is also a problem which India is finding out. So what you have to do, like he said, there is no perfect value. The value of the current account surplus and the current account deficit has to vary between +2 and -2. You go beyond 2 on the minus, the pressure on the currency will be huge and what you say will happen. If you go beyond +2 on the current account surplus, you will have a huge upward pressure on your currency, which will lead to other problems.
I want to move on to particularly Indians' demand for gold, India's demand for gold. I probably think it's because people don't have that much trust in the currency, in the rupee.
See, the problem for us, and the great Dr. Singh told me that the access to markets is only 10% of India has it. 90% of India's leading hand to a mouth existence. How will they protect the value of their savings? You leave it in the bank, it just vanishes.
Wouldn't the gold standard be a great idea then?
No, then you'll have absolute poverty because the government cannot create money.
So why would you say that? It wasn't like during the gold standard, the world was like
the gold standard is what
America had its best growth years during the gold standard.
No.
When they didn't have loose monetary policy.
No, not at all.
Not nearly.
Not nearly.
It was pre-World War II.
No, that was very difficult. They had the Great Depression, and the Great Depression.
Maybe there will be an episode on that. We look into the growth rates.
The Great Depression.
Yeah. But that was
the Roaring 20s when. In the Roaring 20s.
But it was, let's say, before the Roaring 20s, before World War I. They had a lot of growth.
No.
They did.
They had, if you look at the history, they had a lot of periods of growth and periods of heavy deflation.
Those are business cycles that happen.
No. It's clearly tied up with money. Anything and everything is monetary policy.
Mm.
When the amount of money expands, economic activity expands.
Mm.
When the amount of money shrinks, economic activity
I would
shrinks.
disagree with that, but that's for another episode.
That
Yeah,
is another.
we'll focus on gold for now.
I know you are an
Yeah.
Austrian,
Yeah.
but what I'm trying to say, by and large, when the amount of money shrinks, see, the problem is you guys think money as a commodity, has a value. It is like property. It has a particular value. Money has no value. It's only a unit of account. You can run a world perfectly. There was a strike in the Bank of Ireland in Ireland, and the banks did not process checks for nearly 6 weeks. The world ran on IOUs. So this notion of an Austrian that the currency should have a particular value and it should be defended is wrong. If you are smart,
we don't say that really. We say that the value of the currency depends on what you can purchase with it.
Exactly. So what I'm trying to say, why do you worry about the currency? If there are other assets which can protect the value of your purchasing power better, like it happened in India in case of real estate. From 2002 to 2012, there's a big rally. There was another problem, big rally in the real estate. Today, the value of assets in India, real estate assets in India, are higher than gold. Why? Because it's all tax-free money, which is not tax lying there in absolutely useless assets. When one person needs the black money, he sells it to another person who needs to store the black money. This is because your tax rates are extremely high. Only now you have brought down the tax rates. And if we keep the tax rates sustainably low, personal taxes, then the value of land will go down. Otherwise, today land is used as a place to park your ill-gotten wealth. And also the other problem is the tax you pay on registration of land is extremely high in India. So that also needs to come down. You can now argue that today less than 0.5% of India pays income tax. That's true. But the amount of tax you pay on land is 9%. If you make it 2%, then the value of land and the value of property will collapse.
We also have a fun fact about currencies.
Yeah, this is very interesting.
Yeah, it's very interesting because I found out that during the we talk about the British pound, the American dollar. We think that they actually represent a certain currency's name. But if you actually go back in history, you find that a British pound was basically a pound of gold.
Yeah, 8 grams of gold.
So
that is why in South India and many parts of India, you measure gold as pound.
Yeah.
How many pounds do you have? Right? It is nothing but the British pound.
Yeah.
And similarly, the US dollar
was an ounce of silver.
It's a unit of measure.
Yeah.
That is the problem. We try to fix currency to a particular value. You have to understand that if there is too much currency, the government itself will fall because of inflation. Like in spite of all the good performances, the Biden government fell because people could not match their grocery needs. The UPA government fell because of inflation. So if you inflate your prices, currency value too much, democracy punishes you.
So there's a natural check that you
say. There's a natural check. So there is a very clear. That means inflation is tolerable. When inflation is not tolerable, the power of the ruling, the masses will directly rebel against the ruling party.
Okay.
We are not worried about the inflation printed by the central bank. If the food basket or the consumption basket is adversely affected, then you will know that we are running a very loose monetary policy.
Okay. I want to get back to the whole point of how you value gold. So one way a lot of people have considered is the golden constant. So they think that the value of gold should maintain. It's the gold should purchase a certain amount of goods throughout time. So they they say
I don't do all this.
So yeah, I'm just putting that across. So,
I don't believe in all that nonsense.
Yeah. So it says
my valuation of gold is only purely what I think is happening in American monetary policy.
But you are unable to put a number to it. That's the problem.
I cannot put a number.
Yeah, and the risk with that is that you could be, ending up buying something that's already overvalued.
No, I won't, because I know where the first change happens. Right? If there's
change?
If there's a conservative, fiscally, not socially conservative, if a fiscally conservative right-wing man takes over in America, or a Paul Volcker who is a Democrat, but who has tight monetary policy, comes in America, we will know. Here, the Jerome Powell does not even want to run a tight policy.
But the timing, I don't think it's that perfect. If you look at the gold's trend, from 1980 to 2006, gold didn't go anywhere. But there was both tight and loose monetary policy during that period.
The interest rates went up to 21.
Yeah, but that was only till, say, the Volcker's era. But we also had Greenspan.
Wait.
After that, that was loose monetary policy.
The Greenspan came in 2002. So the 80 to 2000 was relatively tight monetary policy. What happened was, if you read Soros's Alchemy of Finance, my first book, you had very high interest rates, and America was still borrowing to spend. America was borrowing to spend, and there was a lot of very high interest rates. Interest rates came down only after 92, late into the Clinton era. And when the stocks markets collapsed, he cut interest rates beyond what was required. That started the gold rally. But I was in India. Let's not say that I knew all that. In India, we were very clear that the rupee will always go down. Gold is always a great asset to own. Very easy to value gold in India. And because the way we run it. And we put history professors and electronics engineers with no background in economics in charge of Mint Street. Then gold is in very safe hands.
I'm done with my questions. Thank you.
Thank you. I had a great time.